Hello everyone, welcome to Calgary Real Estate Market Update for August 2025. As always, we're going to be reviewing previous month, today's in July's statistics. Stay with me for the next 10 minutes to find out everything about Calgary real estate market. Calgary has just shifted from an overheated seller's market to balanced territory in a single quarter. Inventory is up 66% and sales is down 12% and prices easing only marginally. Should buyers celebrate or sellers worry? Let's spend next 10 minutes turning raw data into clear strategy. July sales came in at 2,099 units, an 11.6% drop year over year. New listings reached 3,911, up 8.6%. Total inventory is 6,917 homes, back to pre-pandemic levels, and months of supply jumped to 3.3, nearly doubling in a year and landing us squarely in balanced market territory. Median days on the market stretched to 37, up from 24 a year ago. The citywide benchmark price slipped to 582,900, just 3.9% below last July and still 9% above any point before 2024. And to make a very key context here is the most of a new supply is in a brand new outer ring communities, and the Bank of Canada's decision to hold rates steady gave no fresh relief to variable rate buyers, so demand cooled while builders kept delivering completions. Now we will take a deep dive into property types. We will start with detached homes. Sales 1,031, down 5.7% year over year. Months of supply 3, which is balanced overall. Benchmark price 761,800, barely 0.8% lower than the last year. And looking into micro markets, Northwest, West and South still sit below 3 months of supply, while Northeast and East are over 4 months, giving buyers leverage there. Looking into semi-detached, sales 187, inventory almost doubled year over year, pushing supply to 2.9 months. Benchmark price 697,500, actually up 1.4% over the last year. City center shows the fastest price growth. Northeast and East are softening slightly. Now looking into raw townhouses, sales 373, supplies now 3.2 months after listings outpaced sales for 3 straight months. Benchmark price 446,200, down 3.9% over the last year. Builders are bundling incentives, free air conditioning, landscaping credits to move standing inventory. So take advantage of this. Now we will take a look at apartment condominiums. Sales 508 against 1,014 listings. Months of supply sits at 4.1, the highest since 2021. Benchmark price 329,600, off 4.8% year over year. Extra competition from shiny new towers plus a small rise in rental vacancy, now 3.8%, means buyer can take their time and negotiate. Now we will do very popular district heat check. City center, about 2.4 months of supply and prices still edging 2 to 3% higher thanks to walkability demand. Northwest and West, just 2.3 months of supply. Top schools and new LRT extensions keep detached prices steady. Quick sales still happen under 900,000. South and Southeast, roughly 2.7 months of supply. Mahogany and Seaton remain resilient, but brand new phases in Rangeview and Creekview are discounting to capture buyers. North and Northeast, supply over 4 months. Prices down 4 to 5% after a wave of completions in Livingston, Carrington and Homestead. East District, around 3.8 months of supply and a 5% price pullback as resale competes directly with the spec home releases. So here is my takeaway. One part of the city can be balanced while the other is already tilting towards buyer's market. Location strategy matters again. Now let's talk about new build versus resale. New construction accounted for 31% of all July sales, the highest share since 2018. Builders carrying completed inventory are offering 15 to 25K in upgrades credit, interest rates buy down or closing cost allowance. Resale sellers now need pristine presentation and precise pricing to compete with never lived-in products. Now let's take a look at the things through investor lenses. Average 2-bedroom rent sits at $1,865, still 6% year over year, but growth is cooling. Sweet spot? Inner city or transit-oriented 2-bedroom condos under $330,000 can hit projected cap rates around 4.6% even with today's rents. Secondary suites detached homes in Northeast District. Purchase prices are softening while basement suite demand stays strong. Another thing to keep an eye on is a City Council fall vote on a short-term rental licensing tiers. It could push more demand back into long-term rental pool. Now let's take a look at the forward outlook. Expect inventory to plateau by late Q3, once most of the 2022 launch projects close. With no clear rate cut timeline, citywide prices will likely track sideways plus or minus 1% through the year end. Early rebound signals should appear first in Northwest and West Detached and then in townhouses as move-up equity unlocks. And now I'm gonna give you an action plan. Sellers, price accurately from day one. Median days on the market is now 37. Overpricing can double the timeline. Move-up buyers, this is for you. Combine balanced resale conditions with builders' incentive to negotiate both price and upgrades. Investors, underwrite deals at a minimum 5.25% cap rate to buffer slower rent growth and higher financing costs. Curious how these numbers affecting your equity, buying power, or investment goals? Book a discovery call with me or simply reply market plan and I'll reach out. I'm Uroš Marković with Real Broker. Thank you for staying with me until the very end of this report. And don't forget to subscribe and click the like button. Thank you and see you in the next video.